Hey, Cashflow Ninjas, real quick before we jump into today's episode, I've been asked by many people recently what has been the one thing that has made all the difference on my journey as a business owner and investor. I started businesses and I've invested in businesses. I've invested in single family real estate, multifamily real estate. I still have a sizable portfolio of multifamily real estate, historic resorts, mobile home parks, oil and gas, life settlements, gold and silver, Bitcoin and cryptocurrencies. I could go on. But the one thing that has changed the financial trajectory for myself and my family has been infinite banking. Yes, you heard that correctly. That is the number one thing I've done over the past 2 decades that have made the single biggest difference. And it's not even close. Setting up and building out a family banking system using infinite banking has enabled me to create my own financial system. This year, it has allowed me to focus and not pay attention to all the chaos in the global economy and global financial markets. I really don't pay attention to all the noise about tariffs, trade wars, markets violently going down and then going back up, or interest rates skyrocketing and wrecking real estate deals and other alternative investment deals. Do not be beholden to other systems. Create your own system. If you're interested in working with me and my team at Producers Wealth to set up your own banking system or your own business and family banking system, then go to getwealthyforsure.com. That's getwealthyforsure.com. When you go to getwealthyforsure.com, you can request a free copy of my best-selling book, Get Wealthy for Sure. Only pay for shipping. You can also watch all of our presentations and schedule a call to explore infinite banking options with me and my team. You don't have to be powerless amidst the chaos. You too can have a financial strategy that provides certainty, predictability, and clarity. You and your family can also get wealthy for sure. Go to getwealthyforsure.com to start your journey today. The world is going through changes. Changes happening at a speed that we have never seen before. This is leading to disruption, chaos, panic, fear, hysteria, and a turbulent economy and marketplace. How do you protect your wealth in a turbulent world? How do you invest for cash flow in alternative assets to escape the rat race in times of uncertainty? How do you decentralize yourself, your family, your community, your business, and your investments to become sovereign and escape the matrix? If you are looking for strategies, tactics, and techniques to escape the rat race and matrix, you are in the right place. My name is MC Laubscher, and this is Cashflow Ninja. This is Cashflow Ninja. I'm MC Laubscher. Thank you so much for joining me for another episode and spending your most valuable resource, your time, once again with me on the show. Everything Cashflow Ninja is at cashflowninja.com. That's cashflowninja.com. We've got over 1,000 podcasts. We've got 4 books, reports, webinars, and much, much more, all at cashflowninja.com. And don't forget to subscribe to the best newsletter and the alternative wealth strategy and alternative asset investing space, the Wealth Dojo. You can subscribe to the Wealth Dojo by going to cashflowninja.com/subscribe. I've got a fantastic show for you today. I'm joined by Richard Wilson from the Family Office Club. We're going to talk about family offices, what they are, how they operate, how they invest, and all the exciting things happening in the family office space. Richard, great to see you.
Yeah, you too, MC. Appreciate you having me here.
Yeah, been looking forward to our conversation. The topic is is a very sought after one right now, family offices, in the world of family offices, and that's where you operate in. But just quickly, for my listeners and my viewers that's not familiar with you and what you do, can you please share a little bit about your background and journey with them?
Sure. Yeah. So I started a investor club 18 years ago called Family Office Club. We've hosted 300 events over the last 18 years, put out, 1,000 plus YouTube videos and podcasts, and put out 13 books, and helped set up a couple hundred family offices. And the main thing that we're really helping people with is connecting in person at our events and creating an AI tool set for the industry. And we just find a lot of inefficiencies in the family office space. We just look to kind of fix those or correct those, just like you're doing with this podcast, basically, right? You're just filling the gaps of, giving away amazing nuggets of insight, and it just creates good karma in the world that comes around.
Now, I'm going to start our discussion throwing out this statistic, which I came across in an Ernst and Young report, and why there's so much attention on family offices, and people are looking into this. But Ernst and Young looked at the globally family offices, and the growth is quite staggering, actually, in the family office space. But there's more family wealth right now inside of these family offices than private equity and venture capital combined, which is kind of mind blowing, because the sexy things to talk about, in the investor space is private equity and private equity deals and what's happening in that space, or venture capital, venture capital deals. Shark Tank obviously made that very, very attractive to talk about and sexy with a lot of sizzle. But actually, if you want to actually see how money is built, protected, and multiplied, look no further than family offices. So, for folks that are not familiar with family offices, this is the first time they're hearing about it. What are they? Why do they matter? And then, what is the different types of family offices that exist out there?
Sure. So a family office is really just how the ultra wealthy are investing and managing their wealth. And there's a lot of different flavors of them out there, but the main three types would be a virtual family office, which is you run everything super lean. You might have a part-time CFO, part-time chief investment officer, maybe one full-time virtual person. You try to outsource everything and just keep super lean. That's a virtual family office. A lot of people who have a virtual family office are worth 5, 10, 20 million, but all the way up to worth, hundreds of millions. I've met an 800 million net worth family that had a virtual family office, but it's typically, for one family. A single family office is a more formalized family office solution for one family. Again, they could outsource a lot of things, but typically they have multiple full-time team members at the high level, and then they're investing directly into businesses, real estate. They might still use a wealth advisor, or even this third type of family office I'm going to mention, but they do things internally to some degree with a full-time professionalized, formalized team. The third type is a multifamily office, and that's essentially a wealth advisor that is geared towards the ultra wealthy only, and they're working with clients that are at a minimum usually 7 to 10 million, but many times their minimums are higher than that, and they might only have 5 or 10 or 20 or 50 clients, or they might have a couple hundred, but it's essentially multi-generational, more holistic planning, looking at the tax impact, looking at reputational impact, maybe philanthropy, structuring of deals, trust and estate, angles, etc. But those are the three main types: virtual family offices, a single family office, and multifamily offices.
How do these family offices kind of operate? What's happening inside of them? Because obviously there's the family piece and keeping the
Right,
family on the same track or in an alignment with the
right.
purpose of the family, the vision, and so forth. And then you have legal, tax, and insurance structures. You have your family bank. You've got asset management and family masterminds and governance and so forth. Give us a little bit of a peek into it. How do they operate?
Yeah, the interesting thing is most of the education that's out there on the industry is either from a journalist or one of these big accounting firms or big banks that wants you to give them your business. But the thing is, they're only surveying their bank clients and their accounting firm clients, and it's really slanted. So, what I find is that a lot of family offices are very entrepreneurial. They'll have their money in the public markets parked with 2 to 4 different wealth advisors or banks. So there's different counterparty, brain trusts managing those diversified assets. But then because they're entrepreneurial and usually first or early second generation, they're investing in direct investments often. They might get diversified exposure to AI opportunity sets, put 1 to 5% into things like crypto. They've seen a lot of waves come and go past them that even if they didn't agree with the moral pretense behind it, they see sports betting getting deregulated in many states. They see cannabis being deregulated. They see crypto going nuts. And so a lot of families do have that venture exposure in a diversified way, but a lot of their energy goes into cash flowing, relatively secure hard assets of real estate and direct investments into private equity and directly into companies potentially in the niche where they made their money. So it's very entrepreneurial compared to a third or fourth generation family or a high net worth family just gives their money to their wealth advisor and says diversify me, right? It's very different in the family office world.
So, and then how does the family run this? Because you talked about multi-generational. So you've got the first generation, the second generation, third, and even sometimes the fourth, if the family's
Yeah.
blessed to have them alive at that stage. How does that work? How does the family office sort of operate around that?
Sure. Well, what we do is we invite the next gen to come to the family office club events because we find that that's what family offices do. They'll talk to their kids and bring them to business conferences, bring them into meetings, tell them what gross revenue royalty structures are, explain what a family office is when they're 8 years old to them, have them, buy their kids a small business, get them involved in their current portfolio. Some of the big banks and others out there say, oh, you should have your kids help you give money away. But honestly, these entrepreneurs that created massive wealth typically did not grow up with a silver spoon in their mouth. They're typically relatively thrifty, resourceful, hardworking, very hungry, like the game of business. And they want to instill that in their kids because it's fulfilling. Having everything given to you is not fulfilling. It's deflating. And then you're motivated to do nothing, really. And so I think that the whole episode could be on that one question you just asked. It was so deep that I'll stop talking there, but happy to go deeper on any angle of it that you wanted more details on. But it's an important question for sure.
Yeah, because you bring up a good point that a lot of people that the first generation that generate and create this wealth, it comes from a business, right? They're starting a business, they're growing, they're scaling a business. The majority of them, I mean,
Right.
obviously, there's some inherited wealth, and in the next 20 years, what is it? $84 trillion are being transferred
Yeah.
from one generation to future generations. So that's happening, but for the most part now, it's an operating business that was started, grown very successfully, and that's why how they've generated their wealth. And then the priority then comes, well, how do we protect it? One of it is bringing the kids into the business, teaching them
Right.
that, and then showing them where this all came from,
Right.
and then of course protecting it, and then in building out and mapping out a portfolio. Let's talk a little bit about the portfolio. You had mentioned a little bit of that. So you have operating businesses, which a lot of them invest in, real
Right.
estate, and then of course some venture stuff, trends, smaller allocations, crypto, sports bet, cannabis, that kind of stuff, and then also money in the markets. What do you typically see with regards to portfolio allocations just in family office types of structures?
Sure, sure. Yeah, happy to chat about that. One tool I want to not forget to mention that's really helped me with my children is having a one-page cheat sheet that has our family values. And then I've done an AI summary of these two books that have about 60 success principles. And I just tell my kids, if you live by our family values and these 60 success principles, then you'll be amazingly successful in life and you can ignore everything you see on social media, all your teachers at school, anything a politician says, and you just do this one page and you're going to kill it. And I think that's really important for training the next gen. And so we've got that as a free
Can
Word
I
document.
interject just there?
Yeah.
What are those books that you mentioned for the 60 success principles?
Yeah, the first one is called Success Principles by Jack Canfield, and the second one is called Be Useful by Arnold Schwarzenegger.
Okay.
Um, and I'd be happy to link a Dropbox free link to that Word document for your followers, just so you can see what I use. But there might be different books that you choose for your children, or obviously, right? But the whole point is to create a cheat sheet for your kids and say like, hey, just worry about this. Everything else is details. If you just do this, you're good. You know, because there's a lot of information in the world, right? But to get to
That's great.
portfolio allocation, this is like such a critical question because family offices operate so differently. I see it as three different buckets. There's the diversification bucket, and families might say we like Costco, we like Amazon, we love or don't love Tesla, et cetera, whatever. But otherwise, they step out of it, and it's just diversification. You never get rich typically through diversification, of course, and that's the first bucket. It's like pure defense essentially, and it's important, but it's usually 10, 20, 30, 40%, most often in the 20 percentage of a portfolio for most of the families we work with. The second bucket would be real estate hard assets. It's typically 80% cash flowing, maybe 10, 20% development. Depends how risk adverse the family is. Typically domestic real estate, unless somebody is from Australia or from the UK or from Germany, then they might be comfortable in another country getting more than one vacation house or something. And that's the real estate portfolio. They are typically choosing which real estate fund managers they trust, which properties that they approve of, what states and what real estate food groups. They might say, I like multifamily and self storage, or I like senior living and I like data centers, and only in Arizona, Florida, Texas, or whatever it may be, right? Depends on the family. But you have more control, but you're still not walking the roof of the property typically, unless the asset's in your backyard or that's where the family made their money. You're still trusting that third party for everything except for maybe one little sleeve or niche of that real estate allocation. And then the third area is where you play offense. So the second area on real estate, you can grow your wealth. Usually you look like a genius. You hold on to real estate for 30 or 50 years, of course, but you are picking some things, but you're diversifying still. In the third bucket, it's where to a third party, it looks like the most risk. You put the least amount of new capital in typically, but then you can magnify the results. You typically spike up your balance sheet in that third area, which is the niche where you made your money, or it's using that skill set or that distribution channel you have access to really invest into, manufacturing companies if that's where you made your money, et cetera, because you can get better deal terms. I think if investors can do this one thing, and that is to see deals first exclusively and at a better valuation, if they can figure out how to position themselves so they get to see deals first exclusively and at a better valuation, everything goes better for them. So you need to set up buckets 1 and 2 and your team so you can focus as a super entrepreneur on bucket 3 and really nail the next upside, which is probably where you have fun.
Right, right. And I mean, let's contrast that with just the average investor.
Yeah.
How do these families underwrite these deals versus just your average investor that's out there in the marketplace?
Sure. The average investor, I find, like doctor, dentist, high net worth, they see only 3 to 7 opportunities a year or a dozen or two opportunities a year. They invest based on what's being promised. They invest based on who they trust because they're their friend from college, etc. The more sophisticated family offices on the other end of the spectrum, they're typically coming up with a mandate or strike zone that they can make exceptions to whenever they want to, but they have their primary focus. They typically are not just investing based on who they have relationships with already. They're trying to find the best in class, but very importantly, the trust in the team and the conviction in how they add value and the certainty that this is the right team to put money worth matters way more than what people are promising them. Because I've seen so many frauds and so many people whose platforms fall apart where they promise the world and then they underdeliver massively, or they offer some tricky tax scheme that is a bit too creative and they don't have the experience and like the track record of setting those things up, right? And so it's very family offices learn the hard way that if you invest in things because somebody promised you a high percentage on a piece of paper, it means absolutely nothing compared to true trust, conviction, and so on, who's been around a long time and really paid their dues in the space, and they are the expert on that niche.
To your point, too, the more exotic the tax schemes are in type of tax investments, I think that a lot of people in the alternative asset investing space have found out that those don't necessarily square, like you said, on a piece of paper, right?
Yeah, you just have to be careful, right? Everything in life has some risk, and with some tax strategies, you just have to know going in with your eyes wide open. Okay, this has some risk on it. If I do this, it may or may not work out well for me, right? Like people need to look at it like a sophisticated adult, versus being upset if they should have known there was some risk into it going into it. But I would just like make sure that you're investing based on you really trusting that person. And if your gut is telling you that you may or may not want to do this deal, then just don't do the deal and wait for someone that you're like, this person seemed very solid. And when nobody's looking, they're going to do the right thing. And they're in this for the next 20, 30 years for the right reasons. That's very hard to do. So you never want to trust your money all with one party or more than, typically the rule of thumb is like 7, 8, 12% of your money with any one counterparty. Be super, super careful, and try not to do that too often.
You mentioned the mandate and investment mandate. So this is something I'm always looking for, something that I can use, which is being used in family offices, right? Like, hey, they do this. Again, you don't have to be a Rockefeller to do what the Rockefellers do. You
Yeah.
can figure out your own investment mandate and have a strike zone. Is so when you write this up, it's codified too. It's right there with the other documents, the legacy documents, which we come into. But this is good to have for a family too, right? And this is a learning experience. If you have an investment philosophy that you've developed over, a decade, 2 decades, and so forth, and you can write out investment mandate and add in there the strike zone, which is where it's the opportunities that you're really interested in. It serves as a pretty good guiding principle, on the asset management side of this family office, right?
Right. Yeah, for sure. When I started this business, in 2007, I had less money in my bank account than I owed for rent that month in my studio apartment in Harvard Square. And it's just by studying the ultra wealthy and applying what they did and then using it to grow my family office club that we built the business we have now. And I think that's one, earlier we were talking about next generation and like the first generation being very hungry and having to grow up in hard conditions. And if you're listening to this and you're middle class or you're doing well and you want to make sure your kids grow up hungry, it's important to communicate things consistently around like those values and the investment plan and help. And also communicate like when we moved to Hawaii, we made it clear to our kids, like, look, you see these Lamborghinis on YouTube or wherever. Um, we could buy mini Lamborghinis or we could live a healthy life where we just enjoy being outside in Hawaii. And you might not see the Lamborghini, but we're investing in our health and you having great experiences as a kid and making sure that, the values change who you hire, where you live, what you invest in, who you select for a mandate, your portfolio allocation. The values really drive everything. And a lot of families have not formalized their values. And then they're all over the place and they're not organized, they're not focused, and they're not sure which way to go. So you should not really listen to any third party until they know you. And you should not even listen to your own gut feelings on where to invest or what to do unless you know yourself well enough to have kind of formalized those values and really just focus on that first.
One more investing question. Do you see a lot of portfolio rebalancing too in these family offices, kind of like based on the permanent portfolio from Harry Brown?
Yeah. I do see it, but it's for a variety of reasons, right? Sometimes they trusted a CEO who ran a business like Warren Buffett, and then things change. Or they're worried that Elon might get assassinated and that could impact the value of Tesla, which has gone up massively. And they still trust Elon, but maybe they take a little bit off, not because they don't trust him, but they don't trust he won't get assassinated, right? Or what I also find is that they are relatively tactical in terms of trends, just macro trends. When you've been around for a while and you saw 2008 happen, 2011, and you saw COVID happen, and I remember sitting on my couch in March 2020 and like Marriott, MGM, American Airlines, everything was down 80, 90% in the stock market. And I'm not a stock market guy at all. You'll never hear me be like, oh yeah, I like this stock right now. Or I don't like that. Like that's not me at all. But I remember turning to my wife and saying like, we're going to invest in a lot of stocks right now because like I know macro trends enough to know that all these different brands are not going to stay down 90%. And so they're aware of these macro trends, but they don't, like 99% of my clients do not day trade the market. They're not superly actively involved in the stocks, but they do identify these macro trends and they know that their work ethic, their focus, their business skills, you can surf some waves in that gives you momentum and add to your wealth. if you play your cards right at the right time. So they're aware of those ebbs and flows because they've seen it decade over decade happen again and again and again. And we're in some of that right now, right? So it's interesting time.
It's a very, very interesting time. Staying on that topic, what are some of the things that you're seeing in the family office world, what they're looking at from a macro perspective and also just in the markets, economies, and so forth? What are things that are important? Because it is a very, very interesting time. What's the
Yeah,
Chinese proverb? May we live in interesting times? We most
right,
certainly
right.
do.
For sure. Obviously, AI is a hot area. Obviously, credit has been hot for a long time. People are getting near equity returns with debt like protections, et cetera. Manufacturing has been more popular the last few years, even before Trump got elected. We've also seen service businesses, cash flow, reoccurring revenue subscription businesses have been hot and have high valuations for a long time. But just in general, family offices are seeking more cash flowing opportunities just because they're being somewhat spoiled by other things that are producing good cash flow. And they know it de risks their investment from the very first month or quarter, they start getting some money off the table. And so the more boring the niche that's been stable and investing in a 27-year-old pool cleaning company or an outhouse delivery company or fencing company that's been around for ages and has a steady hand at the helm for going forward. Those types of opportunities are popular. What we're always trying to steer our clients to is to really play a unique game, though, because it's important to know, like, oh, where's everyone allocating? What's everyone doing? If you always just follow where everyone is going, though, at best, you're going to get good at maybe being average. And so you really need to look at how do we create our wealth? What's unique about my DNA? What's my passion, focus, experience? What am I world class at? And really identify the unique game you should be playing as a family office or a centimillionaire or a decamillionaire. And then saying, okay, these are the pieces on the board. Here's how I'm going to win at the game I want to play and keep score. And say, here's where you should be really going deep. And let's monopolize this little niche or just really dominate here and get really smart here. And then we'll find best in class to get our money put to work in these other areas. And playing that unique game, I think, is super important. Like, it's good to be aware of these best practices, but not as important as designing your own game, you know?
Gotcha. And some of you've seen some capital flows too around the world. It's interesting
Yeah.
that in these most interesting times, capital's moving. A lot of it
Right.
from the people that I've spoken to out of Europe, which,
Yeah.
if you if you want to bet probabilities, if you're in that on wars breaking out, it's probably a good spot to place a bet. Hence, capital moving from there. You don't want to have all of your money in one place, and all of a sudden you're in the midst of war, right? So money
Right.
has been moving there. It's been moving east. What are some of the things that you're seeing in family offices? Another thing in that Ernst and Young report sharing just the growth of family offices and how big it actually is globally is all these family offices opening up actually in the east, China and Singapore and Hong Kong and so forth.
Right. Right. Yeah. Historically, the wealthy Chinese have moved to the United States, Canada, and Australia in the biggest numbers, typically, which is interesting. But what we've been seeing is that the newest volume, the highest volume of new centimillionaires and billionaires are really coming out of Asia. And because of some U.S. Conflicts with China and China's kind of stranglehold on Hong Kong and control of it, we've seen more wealth going to Singapore than Hong Kong. For us personally, we've also seen a big boost in Dubai. I think Europe in general, a lot of people are trying to get out of, with the exception of some people still have assets in Switzerland or offshore structures in some small European countries. But yeah, one of the reasons I moved out to Hawaii, besides just trying to enjoy life, is just that I do believe a lot of the opportunity, is in Asia in terms of new wealth creation and where things are really going to move up in value. And so, looking at places like Thailand and Bali and Australia and Tasmania and New Zealand, identifying investment opportunities there, hosting our events again in the future in Singapore, where we've done a few before, and we're doing a family office retreat in Hawaii this summer, for example, to try to get things to start shifting east So yeah, I think there's massive opportunity there. If I didn't have children, it would be going to Dubai as well. It's a great place to be.
Yeah, interesting. We talked about legacy, and you'd mentioned that on a piece of paper you have your Wilson family values and your
Yeah.
sheet, and obviously those two books summarized by AI with success principles. This $84 trillion that's moving in the next 20 years. If you think about legacy, generational planning, and then family governance, this will be a good topic because this is all the soft stuff, right? The hard stuff, the money and the legal and tax and insurance structures, kind of the easier part of all of this, if you will. The family, the soft stuff, which is the vision, the purpose, the alignment of everybody in the family, making sure everybody's on the same page, have the same values, and so forth, and implementing, executing that, or your statement of purpose, your family constitution, your family mastermind. This is the harder stuff, right? What do you see with regards to that, and the structures that are in place for that to facilitate this transfer, not only just of financial wealth, but knowledge and values and traditions and so forth?
Yeah, honestly, I just see lots of challenges, right? There's some family members that don't talk to the rest of the family. That's common. There's some family members who thought they were going to get something and then they did not. There's others that are frustrated because the wealth creator hasn't let go of the reins and they're 88 or 90 years old and they need power of attorney. And now people aren't sure about their decision making even being sound because of their age. So there's frustrations around that. It's not uncommon to have one of the children have drug problems while another child is intensely focused on running the family business and maybe uses the private jet or the vacation home or family assets or has an expense account. And how does that all? So it's really that interpersonal dynamics are definitely tricky. I think the trust and estate planning can be very complex, and I think that is a very challenging area. But I think right up there with it is just the family dynamic. So the reality is, most families do not get all those things in place that you talked about. They try to start, they hit some roadblocks, they formalize maybe their values a bit, and then the other thing is keeping it updated, right? The number of families who actually formalize their strike zone for investing, their family values, having a family office compass, reviewing deal flow every month, getting the whole family involved, meeting as a family in quarterly or annual retreats, super low percentage, super low. It'd be great to do all that stuff, but it's like
Right.
it's like health, right? How many people do you know that sleep 8 hours a day, eat nothing that has artificial anything and hasn't been processed, and exercises every day, right? Very few people. So it's the same thing.
It's almost like you just summarized the TV series Succession, which
Yep.
is apparently based on the Murdoch family.
Uh,
That was the inspiration for it, right? And
wow.
all of the things that you just mentioned is on display there. You've got a billionaire with children that are all over the place.
Yeah.
A second wife, a potential third wife. Like it's fascinating. And it's kind of humorous, I guess, because it's very commonplace to see that in some of these
Yeah.
families, right?
Yeah, for sure. I mean, it's when you know you're worth tens of millions of dollars, why are you going to put up with some entry level job where somebody's ordering you around and telling you what to do, right? Like, forget that. I don't need that. Do you know who I am? Like, I'm not doing that, right? And like, it's like it's a challenging thing for sure. So, I think we talk about being ultra healthy a lot in our club, and people don't expect that when they come to an investor club, but we talk about being ultra healthy ways to keep your mind, sharpened and separate from the kid one pager. I have a laminated one pager I read every morning when I'm shaving, including this morning, that has my monthly, quarterly, annual goals and all of my mental models I need to operate on. It's like my software programming for my brain. And if I do those things, then I'll be a good husband, father, leader in the company. Good things will happen. And that's at the core of things going well, I think, long term for our family. Because if you make a bunch of money and you've been divorced 9 times and you're an alcoholic and your kids don't talk to you, then it doesn't matter how much money you have, you're a failure. And most people would agree to that, right? And
Yep.
so unfortunate things happen. Can't control who your kids are, but it's important to look at things holistically, of course.
I always talk about your actual real wealth is your health and your family, the family members. We
Right.
always, and of course, we have a business and investing podcast that talk about cash flow. But if you think about
Yep.
it in the end, why would I say that that's the actual wealth? Think about like if you are unhealthy or you have a significant health issue, how much money would you spend to cure that? And some of them, excuse me, it doesn't matter how much money they would spend,
Yeah.
they can't cure it, right?
Right.
So it
Yeah.
shows you, hey, would you rather have the money or the health? They would pick the health, and it's the same thing with family. I know someone in our network that makes all the money in the world, doesn't have a significant other or children, so you're basically sitting on your yacht by yourself, watching the sun go down.
Right.
Again, yeah, not that person wanted a different scorecard too, right? So
Yeah.
it's not, you would rather be surrounded by family that you guys get along, love each other, and have some great shared experiences and create some life lasting memories. So
Right.
it's interesting for sure, of where the emphasis sometimes is, but I think, like, to your point, that's the two most important pieces of this, right?
Yeah, and I also think that in today's world, you can get sucked into a negative spiral of, the North Pole is shifting or politics or, AI is going to take away every single person's job. And you can get into this negative state of mind sometimes if you're not careful on who you talk to. And so, protecting that to keep mentally healthy, happy, energized, optimistic, productive, I think is the number one thing more important than investing, to be an example to your children, and just be productive every day as a business person. So I think that's ever more important now with AI algorithms manipulating our every thought we're trying to.
Yeah. What are some? I'm going to finish with some trends in family offices. What are some of the
Sure.
biggest trends that you're seeing right now in the family office space?
One of the trends is just the use of AI due diligence tools, the use of AI co-pilots for investing and analyzing and researching things. There's studies by Harvard, BCG, and MIT, two different studies, and it showed that on average, you gain 11 or 12 IQ points. You can move 33% faster and make 25% less mistakes, using AI to do knowledge work, right? So, everyone's under resourced feeling, even if they're a billionaire, there's too many things coming at them than they can ever react to. So that's one trend. The other one is just the realization that every single year, and this comes up at our events often, people have to say no faster and more of the time because now they have 100 LLCs instead of 84. Now they have 20 K1s coming in. Now they have 1,000 employees. And the deals they used to say yes to or at least take a meeting on just 1 year ago, they can't take a meeting on anymore. And with AI systems sending out so many emails to people, they have to ignore a much higher percentage of things coming at them. And so just being really sure about what you're here to do, what your goals and priorities are, is something that we see, that time constraint feeling on family offices is definitely a big trend. And then the other last one is just that nowadays everyone's hearing about family offices. And 10 years ago, most people hadn't heard of what one was really. And so the term is being used much more often. And so you just have to really figure out like what type of a family office someone is. Some people are confused about the term and they use it when they probably shouldn't. Others it's just a strange type of family office that I guess is one, but also is trying to sell you things. So you just have to be careful on like when you're interacting with people to really vet who they are and go slow and be careful on all of that.
Richard, one of the questions that I ask all of my guests, and we talk a lot about business. We talk about investing,
Yeah.
cash flow, wealth, and all that kind of stuff. But we talk about legacy, and I've enjoyed talking about legacy with you already on this. But I always ask my guests, if you cannot pass on any money to future generations, and all you can do is pass on three principles or values to them to help them achieve happiness, success, and build wealth, what would they be?
I think the first one would be healthy, right? To be healthy mentally and physically. I think the second one would be grit, just to have that work ethic and be able to work through challenges and see things through. And like Warren Buffett says, when it rains, get out a bucket, not a thimble. And part of grit is knowing when you're getting lucky and then working extra hard to take advantage of that. Good luck. And the third one is just integrity, but not the way that people always refer to it, not just moral integrity, which is the aligning of your values with your actions, but integration of as many things in your life as possible. Your team, your business partners, the food you eat, the products you sell. The more things are integrated, then the more everything's going to go very quickly. Where if it's fragmented, it'll be like you're pulling anchors behind you, and then there'll just be problems all around you. So I think that those are the three things I would emphasize.
Fantastic. Richard, where can people connect with you? Where can they follow you? Is there a website that you can direct them to just to see all of the many different resources you have available? You've got books, you've got articles. I mean, there's a whole bunch of stuff there, an ecosystem. Where can they connect?
Yeah, sure. The best place to go is just familyoffices.com, plural, familyoffices.com. And my phone number and WhatsApp is actually at the top of the website. So you can shoot me an audio message or a text message if you have questions. And we have about 30 different artificial intelligence tools that we've developed now that are super helpful and powerful no matter where you are in the world. So we'd be happy to answer questions or provide the Word document templates we talked about in this interview. So just let me know if I can be helpful to anybody.
Awesome. Well, thank you so much for coming on the show and sharing your journey and your knowledge and providing so much value for all of my listeners and viewers.
Yeah, thanks for having me here. Appreciate it.
And thank you for all of my listeners and viewers for, again, spending your most valuable resource, your time, once again with me on the show. Everything Cashflow Ninja is at cashflowninja.com. That's cashflowninja.com. We've got over 1,000 podcasts, 4 books, reports, webinars, and much, much more, all at cashflowninja.com. And don't forget to subscribe to the #1 newsletter in the alternative wealth strategy and alternative asset investing space, the Wealth Dojo. You can subscribe to the Wealth Dojo by going to cashflowninja.com/subscribe. Until next time, live infinitely. This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.